half. We're short at the market at 29.50 again, re-entering the position at 29.50 after uh, reevaluating the circumstance, and now we see a big smash it down. So that's the riggers for you. That was looked like what I call the final insult. That's one of the setups where they push and jam the upside, then they take another jam at the top again. It's like the final insult of rigging before they finally decide to grow up and just let the market flop to the downside, flow to the downside. Okay, so we're watching once again, holding under 27 to back off under 24.50. It's virtually the same parameters here. Watching for 24.50 or lower to spark a potential stronger move on the downside here. We're short at 29.50 on that re-entry there. And let's see if we can get this thing to back off and stop pushing the upside again. They might try to play the game again and jam it up again, but let's see if we can back them off this time. The pattern's set up for a lower move. Let's see if we can get it to cooperate and get you-know-who out of the way. Let the natural sellers come in, riggers. Leave it alone. Stop pushing it and hyping it up. No reason for it. They're not trading our mini NASDAQ. They're manipulating everything over in the cash NASDAQ up here. They're not regulated up there as much. And besides, they're the riggers. The regulators don't tell the riggers what to do. I'm sure there are some
Order
good
pending.
people at the regulatory agencies that would like to tell them what to do, but that's gradually all going to change. It's all starting to change. See if we can get this thing to break down. 24.50 or lower. They just went to 24.50. So what we did on that last trade, hold on a quick second here. Still targeting 15 on this move. Like I said, I'm still looking for 15, a move down to 15, which is down here on this yellow line. But we're watching to see now. You can see why I got back into the trade. It was an artificial move, and now that's proven by what they're doing here. Will they now let the sell side get some teeth? According to my pattern here, they should be able to. But like I said, I don't mean to keep repeating it, but I'm just trying to educate you about how these markets are rigged. They're out of control today, and I don't know what the reason for that desperation is. I can't really say. But just to remind you again, on this trade, we're short at 29.50. Therefore, we're going to take 5 points off at 24.50. Not the whole trade, 1/3 of your position. It's a system we've been using for a long time on these swing trades. This is a swing trade, so take 1/3 off at 24.50, which you should have already done because I mentioned that before. Well, they went 23.75 in that last dip, so we already have +5 on 1/3 of the position. You have to do this because a lot of times, well, exactly what you're seeing here today. This insane rigging has been going on since 2009 is when they really kicked it in. There's 24.50. So you're taking 5 points off on 1/3 of multiples. If that means if you got 3 contracts or more. If you're trading 2, my advice is to hold the second one at least for 10 points, which would be 19.50. Take 1 off there at 19.50, then hold the rest down to 15. Here comes 19.50, hopefully here. Get that 19.50, then you can get 10 off on that. See if we can blast them a little harder here. Get that 19.50 going, and then if you're holding 2 contracts and take 1 off, there it is. Boom! There, take 1 off, and that takes another 1/3 off at plus 10 points on this position. You see that? That's the way we trade these multiples on the swing trades, and now we're holding for move down to 15. So stay ready to exit the trade on a move down to 15. They're probably going lower. Darn tempting to want to hold it for more, but we're going to just follow our regular parameter here, trying to get them down to 15. Here we go, taking them down, slowly moving them down, trying to get 15 going here. Let's see if we can blast them under 17 and smoke them down to 15 here. Here we go. Let's take 17 out and hopefully blast them. On a hard, fast move dive under 16, go ahead and take them out, close them out right under 16 there. Close them out right under 16. There's 16, there's 15.75.
Order filled.
And we're closed out on the trade there at 16 or lower. So 16 to 19 is plus 1350. And that's the way we operate the swing trades. And plus 1350. And then I'll do the math here. Tell you what it nets out to be. So that's how we do these swing trades. And I usually often will adjust the downside. Like I said, they're taking them out of 15 or 16 or lower. I still think they're going lower. I think this trade could actually run substantially lower, but even on the swing trades, I'm trying to get the easy money. In this case, for that swing trade, this move down to 15, 16 area here was the easy money. Going forward, they could spring them back up to here, and then you got to sit through that. They're probably not, they could drop straight down, but not too likely. But either way, doesn't matter at this point. We're out for a 1350 gain on the whole position with subsequent taking off a third of the position 5, a third at 10, and then the final third at 1350. If you had 30 contracts, you took 10 off at plus 5 points, 10 off at plus 10 points, and then the rest. So it's all different. It all percentage-wise, it's the same, but it just depends. And you see why I dove out under 16. They did hit 15, but look at, they actually hit 15 quarter on the low. Look at that action. 15 quarter on the low, now they're springing back. That's why I said get them out at 16. I can see that usually in the movements of the prices and based on the action of the previous couple candles. So that was a good move there. So great job, plus 1350 on that trade. Total gain from start to the short to the end, and great job.